What's happening, guys? I'm Coby Chowan here with Craig McCoy, and welcome to our latest Tuesday training, where every week we bring to you a live training from lead gen and AI all the way to business planning and goal setting.
You have the new version and the old version. We collaborate to make it awesome.
If you want to join and jump on the next Tuesday training, join our school platform below. It's completely free. Click the link below, and we'll see you there.
Good morning. We are a couple minutes early, so I wanted just to let you guys in. If anybody has any questions before we get started, fire them away. We got special guests here today. We got Josh Coburn and Eddie Cepetto from First Link talking about some investment type loans. So yeah, people are still kind of rolling in. So as we continue to talk, we'll continue to let them in. But anyways, I wanted to kick it off with I say Bill and Tim, but Bill's not here, so let's go with Tim giving us a little bit update on the mortgage market and what's going on.
You got it. Well, same old, same old. Hopefully, Iran peace talks are going to move forward and allow us to get through this Iran conflict, get the oil prices back down to normal, so gas prices aren't as crazy, and that's going to be good for mortgage rates. Inflation actually came in a little better than expected on some recent reports, which is kind of a change and nice. So, lower inflation equals lower rates, and the only thing kind of keeping us in check right now is tight mortgage spreads and Treasury yields are actually cooperating pretty well, even with high oil prices. Otherwise, we'd probably be looking at rates above 7%. So, considering what's going on, we're actually sitting good. On the subject of rates right now, our usual scenario, $700,000 purchase price, 20% down, 560 loan amount. Conventional loan, 30-year fixed, looking at about six and a quarter for no points. At about 1 point costs, 5.99, almost 5.875%. And then if we're looking at a government loan, FHA, VA, no points, we're looking at about 5.75, and with about a point cost, we're looking at about 5 and 3/8. So rates are improving but volatile. Obviously, things can change daily. So get any clients in touch with either myself, Bill, or Eddie. Just getting connected with a loan officer if you have anybody, so we can make sure they're in good position to act on something and not be scrambling for financing because day by day rates can change a lot. So you need someone like us on top of it to hopefully get them locked in and time the market right. And that's all we got. Good luck.
I love it. It's a good plug for First State Mortgage. I'm going to also plug escrow while we're at it. If you guys are
There you go.
using our escrow and mortgage, thank you very much. If you're not, at least give them a try, give them a shout. Okay, I am going to bounce out of this meeting and I'm going to let Eddie take it over. Eddie and Josh. Josh Coburn is here. As we've talked about in the past, we are going to be focusing pretty heavily on investor type products, helping you guys if you're interested in becoming investors yourselves. And so if you guys have any questions in that regard, we are starting to roll this out pretty heavily. So please, jump in if you do have questions. I invited Josh here today because Josh is asking me questions, and I figured, you know what, these questions that he's going to ask are going to probably be very, very similar to what everybody else is going to ask. And before I leave this scene here, I want to kind of pitch next week. Next week is going to be an AI intro to you guys. I'm geeking out right now on AI, and I'm a little bit probably too involved and talk to it way too much. But I want to give you guys an intro on how best to use it. And so what I did this morning, Eddie had no idea, is I created a couple different hopefully I don't share anything that's too revealing here. But anyway, so like this morning, I just rolled out and I made this little presentation. Okay, Eddie's going to use it for whatever it's worth. I said, okay, that was Claude. I'm going to go ahead and try Perplexity and see how it differs if I can figure out where I put it. So this was one I made in Perplexity and kind of the same thing, right? Just giving you guys an idea of what AI's capabilities are. It, for me, is quite literally just baffling on what it can and can't do. So again, I'm going to just turn the floor over, but next week we're going to go over kind of, what we're working on the AI front, difference between AI agents, difference between GPTs, and how to best prompt AI for real estate, for marketing, for whatever systems you guys have in place. So that's it. I'm going to stop talking and turn it over to.
You want to go to that the Claude one?
Yeah. Cool. All right. What you guys have it? Josh, come on in.
Okay.
What's up, Eddie?
What's up, man?
What's up, everyone?
All right, this is Josh. So we're going to go over a few scenarios, real world scenarios. But first, I just wanted to go through this presentation. I'm not going to read everything out, and it's not going to be like a college course, but just to use as a reference as I'm talking about our new products. So we've partnered up with a few different capital partners to have our own in-house First Link mortgage products for both fix and flip and DSCR loans, and I'll get into what those are if you're not familiar. But this is really nice because as Link Brokerage agents now through First Link Mortgage, your sister company, you've got access to really a suite of some pretty incredible products that can fill in a few different buckets depending on what it is that you're trying to do. Again, this is just about First Link Mortgage, licensed in 10 states and adding constantly. 30 plus lender partners. Again, I'm probably adding 3 to 4 a week. That number continues to grow. So, if I ever find out about a program that I think is beneficial to us, beneficial to you guys, I reach out and make sure that we partner up with those lenders. Fix and flip loan is what you get when you're trying to do a fix and flip. So basically, it's purchase money with a rehab loan that is done through a draw schedule. So it's up to 90% of your purchase price and 100% of your rehab costs. These are purely stated loans. Really, what we're looking at is credit worthiness, and we're going to do an appraisal that includes the ARV after repair value.
So you need to admit anybody.
Yeah.
There is.
Okay.
Sorry.
Just if you see it pop up, just in
Yeah. So it's pretty straightforward. They're generally 12-month loans. They can be 18 or 24. If they need to be, those tend to cost a little bit more. There are no prepayment penalties on these. So if you are able to rehab and sell the property in 3 months and you've got a 12-month loan, you pay the interest on the time that you've had it out, and that's it. Any questions on the fix and flip loans yet? No?
Being on a draw is pretty powerful. I don't
Yeah.
know if everyone recognizes that, the difference between being on a draw versus.
Yeah, so a draw is great. Let's say that you've got a $300,000 rehab budget. Day one, you're paying zero. You're not paying on any of that money. On a draw basis, as you complete the work, you then ask for a draw. So if you, in the first 3 months, you've spent $50,000 on the rehab budget, you're only paying interest on that $50,000. So that's the way those draws work. It's super, super simple. Take some pictures, supply the invoices, and you get reimbursed 24 to 48 hours. DSCR stands for debt service coverage ratio loan. This is how most commercial loans are done. It's just for residential, and we can go up to 10 units on these, which is generally considered a commercial loan, anything over 4 units. But so all we're going to do is this one's super, super simple. As long as it's an investment property, a rental income property, then you can use just the rents in order to qualify. So that can be anything from a 1.25 ratio. So if you've got a $10,000 a month payment and you're collecting $12,500, that's a 1.25 ratio. You can get some killer rates on those in the low sixes, which is competing with conventional loan rates.
Solid.
Super, super, super solid. If it's anywhere between 1 to a 1.24, again, the rates are going to be good. They're not going to be as strong. You can even do a no ratio. So if you've got a $10,000 a month payment on a property that's collecting $2,000 a month in rent, we can still get it done. The rate's going to be really ugly. But it can be in a scenario where, we don't want to get people into loans that they're losing $8,000 a month. It's just not a good position to put a buyer or borrower in, a client. But if we need something like a Hail Mary in order to save some type of deal, then that is an option. Let's hopefully have an exit strategy on that. So the Burr strategy, this has been 90% of my loans for the past 3 years. I work with investors. They do a fix and flip. They stabilize it. They get renters in, and then we refinance them into a debt service coverage ratio loan. So I get 2 loans out of 1 borrower. But again, I mean, for you guys, it's not as important. But the thing is that we've got an exit strategy for them if they want to stabilize. If they just want to do traditional fix and flip and sell it, which plenty of people are doing, that's also available to them. This just talks about one of our capital partners. White label advantage, again, not super important. This is a real world example. I'm going to get more into it with Josh, but this just shows a purchase price of 385, estimated rehab budget of 45. Again, these numbers are probably kind of low for Southern California and some of the markets that a lot of us are in, but just to give you an example of what these numbers look like. So, it just goes into all these. Again, not super important. Let's see if there's anything else here that we want to go into. Here we go. So first link versus the competition. Beyond being our own brand, our own product, we can close in 1 business week. Literally, if you submit a file on a Monday, we can have that closed by Friday. These are good. A lot of people also use these to make like a cash offer. They can write it at 15 days and offer and beat out the competition to get into, hopefully be able to buy a property rather than just saying, hey, we're going to remove all our contingencies and we're going to offer some sky high price over asking. If you can say, hey, we're a cash close 15 days, we can close it within 5. I mean, that's pretty incredible. So this just goes into the closing times compared to all the other, or some of the more popular ones out there, Lima One, Kiavi, Civic. The other thing that I run into a lot will be somebody that says, well, I've got a check writer, somebody that just handles my, local hard money. It's my dad's friend from college. They're, whoever. They're doing generally 60 to 65% LTV max. They are very adverse to any risk. So they want to make sure that they've got that and their rates are super, super sky high. But as far as timing goes, there's the only ones that can get close to what we can do. But we're going to beat out pretty much everybody on timing and on rate again, because it's our own product and we want to make sure that we're as competitive as possible. This just goes into what we have beyond the products that I've been talking to. Again, 30 plus lender partners, and that's growing every single week. Private lender portal. So we've got a portal that it's not going to be necessarily for them, but the LOs, they'll have access to that portal to be able to check on the status of any loan, on any draws, et cetera, et cetera. This is from referral to close loan. So we will have, from the day that you have asked us for an LOI and provide us with the docs, this just goes through how we'll have a term sheet within 24 hours and we'll have that deal closed within 5 days. On a lot of properties, we won't require an appraisal, or we can go that route if we need to close quickly. We can waive the appraisal as long as the underwriting team agrees with the value. If you're telling me that, the house is worth $1.2 million and it's in, the highest comp is 800,000, probably not going to take, the borrower's word for that. We are going to ask for an appraisal in a scenario like that. But if it seems to make sense, again, no appraisal. That's one of the reasons that we're able to get these closed so quickly. And then that is it. So let's
Just quick, you were talking about the appraisal of the loan.
Sure.
I'm thinking to myself about the loan contingency versus appraisal contingency. You were talking about waiving the appraisal for your loan, but that actually, when it comes to the contract, we could just have our loan contingency, right? We can lean into that.
Yeah, I mean, what I generally do is I put a physical inspection contingency,
Right.
and that gives you really the freedom, there. Also, once you are approved as a borrower for 12 months, you as an investor are, or your investor partner will be approved. It will be just on a property by property basis. So we don't have to continue to pull credit and, whatever the due diligence that is going to be required from the borrower themselves. We're just going to be looking at the property. So once we get that contract in, if we do an appraisal, that's going to be the only thing required, and then a review of the rehab budget. And it's super, super straightforward at that point. So how do we go back to?
Got it.
Yeah, I don't want to do share screen anymore.
Trying to unshare it?
Yeah.
I think we are unshared.
Oh, okay, cool.
Yeah. What are you guys seeing right now on your screen?
You're just seeing us.
Oh, like that. See me?
You guys see us waving? What do you guys see? See us waving.
All right, cool.
Okay. Awesome.
All right, Josh.
All right, you want to get into it? Actually, it's funny. I'm texting someone right now. One of probably my top contractor. He would love to hear that. He'd be very pumped to hear that. But I'm careful about sharing him because he's that good. The thing is, we use him for our property management. So he's really good with like boom, 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 taking care of jobs, but you can do bigger ones now. He's a class B now. But anyways, I'm literally texting him about this little, I'll call it a duplex, but it was zoned SFR in Long Beach that I want to price out with you, Eddie. We'll do that in a few minutes. But one thing I want to say before we jump into it, what I just saw there, how we line up, how First Link Mortgage lines up. This is not a sales pitch, by the way, because I'll use whatever lender it takes to get a deal done.
Hey.
Whichever one. But here's the thing. What I just saw there is that we're beating out a lot of the competition. And I'll say, I don't think I know a deal. I don't think I know a deal that I've done over the past that's investment focused, whether that's a DSCR, fix and flip, which is, I don't know, 2 dozen or so like that, count wise. I don't know if I've known one where the lender is not probably the most important person to getting the deal done.
Yep.
Unless it's cash, of course, right? That's why cash is king. Sellers know this, but they really don't understand it. Most sellers and buyers don't quite understand all that goes into the lending portion. It's funny, there are memes about this. If you follow any of the real estate focused like Instagram accounts that are kind of like comedy memes, where it's like you got, the seller sitting there counting their money, the agents hustling around and counting a little bit of money, but then like the lenders in the back, just like, hey, like they know this, that they are the controlling figure in getting the whole deal done. Obviously, the seller has to sign the paperwork. But typically it's the seller says yes, the buyer says yes, everyone says yes, and then the lender's like, I don't know. They're like the ones that have to actually sign on the dotted line and make sure it happens. Not that they're the ones, they're approving it, I guess I should say. So the fact that we are out competing when it comes to availabilities options. I mean, I was just seeing, greens across the board on that chart competing with like Kiavi and some of the other ones. That's a huge benefit, but also having service mindset. So I know I work with Bill a lot, Eddie. No offense to you.
No, that's fine. I'm glad that you're working with Bill.
I love working with Bill. Bill's awesome. No, we're going to talk about some investment ones, which are a little different, but Bill still has access to those. The service that I get from Bill, and then so far from you, it's totally different because a lot of lenders, if they do any bit of business, they also kind of like, hey, are you worth my time? So they'll like try and gatekeep. So it's really powerful that we have this in our back pocket. It actually sets all of Link, any agents that have access to this, it sets us apart. I digress. I wanted to understand, so about the appraisal portion. So I know how DSCR loans, like the rental appraisals work.
1007, yeah.
Yeah. So those are kind of funny. So I had referred, I'll just say someone to buy out a property. They had inherited it. They had 50% ownership, basically a $2 million property. and the one they inherited with family member wanted out of the deal. They just wanted to
Yep.
liquidate.
Happens all the time.
And so they were like, shoot, I don't know how I'm going to come up with the money for this. Because they didn't have enough income. They were like, I could never have $1 million loan. And I was like, well, you need to talk to Bill, because you can qualify under a DSCR. And they're like, what is a DSCR? So it wasn't really a client when it comes to a buyer. It's actually more of a close friend. And so I explained it to them, and the entire like 4 months of them ramping up to then be able to buy out their family member who wanted out of the deal was going to try and force them to just sell it just so they could get their little portion of cash. Um, my friend was able to buy it at the average of appraisal rates, and it's already appreciated in value, but buy it with zero money down because they had 50% equity. So they recognized that they had 50% equity. They ran it based on there was essentially one metric that was like the focus of the conversation for like 3 weeks, which was what will it rent for? That's it.
Yeah.
And so that appraisal became super, super important. Can you share a little bit of how they go about that? Is it kind of like a Wild West when it comes to those rental appraisals?
So the rental appraisals are also, it looks almost identical to an as-is value appraisal. A 1003, so a 1007 rather is the income portion of the appraisal, and they're going to look at comps. So
How do they like what's a rental comp? Because sales comps are easy. We can see closeds. But rental comps are kind of tough because you don't always see the close. They go away off the market.
it can be tough if it's not been logged in the MLS.
Right. Yeah.
So, but they will, I mean, that's what they do. So they'll start off within, like a half-mile radius. They're going to try to get as close to bed and bath count, square footage, lot size, and then if they have to slowly go back in time, from 6 months to 12 months or expand that radius, they're going to try to find 3 to 4 good comps to find what it's renting for. If there is a tenant in there, they will take the lower of the two generally. So it's either going to be what your lease contract says,
Got it.
or it's going to be based off of the 1007. But just as we often see with purchases, right? How many times does it come in right at your contract price?
Yeah.
So not that it always does, but more often than not, I would say. So it tends to be very similar with the 1007s. If you've got a lease at $6,000 a month and they're finding comps that are going to support that, they're going to give you $6,000 a month.
So I have one that's being worked on right now. Bill's working on. It's actually a double loan, so a purchase loan. That's contingent upon a HELOC on their house.
Mhm.
So they were going to sell their house. We've been working on selling it, but the reality is they're not feeling like they're going to get the price that they really want, which is fine. I'd rather keep the client and we just take care of renting it for them. Bill, I think, unless he's on, he could clarify. I think they're still a little unsure of what it's going to rent for. If it's like a HELOC like that, where they're accessing equity, which again, back to the lending tools, it's very powerful to be able to have a tool to say, oh, you can access your equity that you have in your house without selling it. That's a major, like, I just want to transfer to anyone that's listening that has like ears to hear this. It's a very powerful thing to change someone's future like forever by saying you don't have to sell this home. We could actually do this. And you can actually access that equity. I just had one for a $3 million property that's now my client because I explained to them that they can rent their home, take out equity, and go do what they want to do. And then they're going to give me that listing later. Now, is it a guarantee? No, but the chances are when I build those relationships, it's very powerful. That's why that's how you build a business is relationships. But to go back to the rental loan,
Mhm.
is that the same type of, so you said 1007? Is that what
1007, yeah.
Is it a 1007 they'd use for a HELOC, or is that different? Because he's trying to figure out what it's going to rent for also in this case.
Not the subject, but
The seller who's not going to sell, who's
Mhm.
actually going to buy something else.
Mhm.
And they need to essentially come up with money to pay down this.
So they're going to get a
that's going
HELOC
to-
out of the property that they currently have.
Yeah.
Depending on the product, I've never seen that they would have to do a rental survey for a
Okay.
HELOC.
So that's why he said, if you can give me a signed lease, then this will be basically approved.
Yeah.
Okay.
But on the purchase property, the property that they're going to purchase, they will do a 1007.
If it's an investment property.
Yeah.
That one, that's going to be
Owner
a
occ.
principal. That's going to be an owner occ.
Okay.
Which
Okay.
is
Yeah.
different.
Yeah.
But anyways, so that actually, I want to come back to what I was asking about the appraisal
Sure.
for loans. So when it comes to the real estate side, this is what I was thinking about as you was talking, and I think as agents specifically, which I don't know how many lenders we have. Do we have mostly agents on here, or do we have some of our? I mean,
Tim's the only LO.
so we only have Tim. Great.
Yeah.
So I'm speaking to other agents. When it comes to negotiation, if you enter contract with a inspection contingency, and that inspection contingency, usually the sellers want to see that super short, but we're not doing that rental eval until day 10, day 12. I mean, they may start the eval at day 5 or day 6, but they don't really have confidence telling you, like, let's say we're buying an investment property, duplex, triplex, whatever. And I'm like, hey, I know this is going to rent for 3,000 per unit. It's going to be $9,000 a month. And you're like, hey, that's great. I think you're right, but we still have to get this 1007. That inspection contingency, if I make that 12 or 15 days, they're not going to like that typically.
Yeah.
Especially if we're negotiating price down, right? They want to see a short inspection. So that's what I was getting at. The specifics is I can remove the appraisal from the offer, which makes a lot of sellers feel good, but keep the loan contingency.
Yeah.
So that's what I would want to do. And
Yeah.
you would agree with that, right?
Yeah. Yeah. Yeah.
Because it's going to go all sideways if, we don't have the loan contingency and we try and, we're not really finding out about that loan until day 10, 12. I've been in deals like this with agents where they just didn't understand. They just didn't understand that simple fact that you can't remove that loan contingency early. Like, I don't necessarily like it if I see that and I don't see any lending paperwork.
Mhm.
It's like, well, what kind of loan are you using? That's another thing. A lot of people have gotten a lot of agents have gotten very lax on their offers. And so for us as selling agents, when we're representing a seller, we actually need to be very specific about asking the hard questions of, well, what kind of loan are you using? So we understand their real capabilities. Because a lot of times agents and buyers will come with a bunch of buffoonery is the wrong word, but oh, I got $1 million in the bank, or I got this, or I got this. It's like, well, are you paying cash? Well, no. It's like, okay, well, it doesn't matter what you have in the bank.
I just want to interject real quick. I would have your lender partner, your LO, cross qual, and they don't have to collect docs. I do cross quals for my agents. I don't collect docs unless I'm talking to the lender that sent the pre-approval, and it sounds like they have no idea what they're doing.
Yeah.
So I base it off of that conversation, but I will ask them all the pertinent questions. If it's a conventional loan, do you have a DU, or if it's, FHA or VA? I'll ask, general income questions about what kind of income they have, how much income it is, how long they've been employed, all the basic questions. Based off of their answers, I might collect docs if I don't have a high level of confidence. But, if you have a listing and you're getting offers, I would absolutely have your lender partner, your LO, be making those calls so that you don't get into those scenarios. I've had clients of mine who have been repeat clients who have amended, photoshopped basically pre-approval letters that I've sent for other properties. And all of a sudden I get a call and they're like, hey, I'm in contract on this property. Here's my fully executed RPA. And I'm like, I didn't pre-approve you. So,
Yeah.
You never know. I mean, crazy things have happened. Luckily, these have been clients that, they're repeat clients because they've got great financials. But, you never know what's going on out there. So I would definitely take advantage of your loan officer, make sure that they're making, that call, having that conversation with the buyer's LO, so that you don't get into a scenario where you're 14 days into escrow and suddenly the lender can't perform.
Because you leased a new Range Rover
Yeah. Or bought a boat,
or bought a boat.
there have been some crazy things. Lost your job last minute.
No, Dave.
Yeah, I know. Dave's on. So
Oh. Shoot, that brings up. Oh, well, that brings up another thing. So, two things. First thing, and you're going to see this a good amount. I've been seeing it a little bit more recently, where especially as interest rates have been so fluctuating, a lot of people are hurting in the economy, that you will see in listings, typically in the private remarks, where they would say where to submit the offer, they'll say um, you need to be pre-approved or not pre-approved, cross-checked
Yeah.
by this lender, and they'll just like give the email and the phone number, and
Yeah.
like, and that's what they have to do for their offer to be considered. And you can ask your seller that, your client, just ask like, hey, would you like every single buyer who comes through, would you like them to be pre-approved? Totally valid question, totally valid request actually from them, because that's the thing too. We need to ask the right questions. Craig Chamberlain famously told me that when I started working with him, is the biggest differentiator that we can have from every other agent is asking the right questions. It's just like having the right tool, right? But I also want to point out that same thing. I have a different client that I was working on with Bill, and they've been pre-approved. They've used a person for 3 different transactions over the past 10 years. And they were under the impression that they were only pre-approved for ultimate purchase price. They had to sell their home and ultimate purchase price of 1.5 max. And Bill looked at them, got their docs, got about 80% of their stuff. And Bill was like, yeah, I actually see if they sold their home, they could go up to 2 million. That's a huge differentiator, right? And that could be just products that lender had access to.
Education's a big one.
Education's a huge one. So I I can't focus on this enough. Just talking to all lenders are not equal. Same as agents, right? We're not all equal. It's not true. Yes, any one of us can push send or sign a contract, but we are not all equal. Same with lenders. So having the relationship with Bill helped me tell a client that they were pre-approved for far more. And so the purchase price that they were still comfortable paying, which was less than 2 million, um, they felt way, way better about that. Way better about that. It's like, oh wow, relative to the rest of the world, we're actually being frugal.
Yeah.
And so they're even more pre-approved. The stress and anxiety that came off the whole relationship was immense, right? Which in and of itself is worth it.
Yeah.
Helping them to feel good about the whole process. But great. Let's get into running numbers on a deal.
Sure.
Do we want to mimic or screen share as he does it, or just have him do it behind the scenes? The
Either
actual
way, I mean, the spreadsheet, you
Yeah.
can mimic it.
doesn't
It's
matter.
on there if you want to share it.
I just don't want to mess anything up. So
Yeah.
let's run with one. Actually, the one that I'm looking at right now. It's funny, Craig McCoy told me to come in here with a couple contracts out. See if we can have one under contract so we could talk about that one. But I was looking at let's see. So I was looking at a big one in Bellflower, which is totally off market. I was looking at one in Los Alamitos, which is where my office is. These are bridge. So these are bridge loans, which I want to clarify. So when you call it a bridge, it's a bridge to a DSCR typically. Or
Bridge is
it a
just
bridge
like
to a flip?
it's just an antiquated term. I mean, there were bridge loans back when these were coming out, and I mean, it's not bridging anything
It's a
except for
temporary loan.
it's just a short-term private money loan.
Perfect.
Yeah.
Perfect. So you would use it to bridge to either a DSCR if
Or
you
a
hold
sale.
it,
Yeah.
or a sale.
Yeah.
Either you cash out like Burr strategy style, or just cash out and take the profit and go home, or you DSCR it into a rental.
hmm
And so that's a multi-step process that I haven't gotten to the DSCR holding, because I've been looking at, when you told me that these loans could be used for up to 4 units, it's such a simple thing that kind of changed my
10 units.
up to 10.
Yeah.
I thought it was up to 4.
No, we can go up to 10.
So that's even more. So that means I can go out into the market. I can look at, and there's dozens and dozens of these on the market. Now, typically, if you look at something on the market for these loans, they're usually not going to make financial sense as they sit, because you have literally millions and millions of eyes that have already done the math on them. But that's on the basis of where they're at.
Hey, Eddie, clarify that real fast. Explain to them the difference between this commercial type loan up to 10 and versus a residential loan 1 to 4.
Yeah. So as we mentioned earlier, anything 1 to 4 is true residential. 5 to 10, I would call it hybrid residential. It is still a residential. I mean, the loan that we underwrite is not going to go through the scrutiny of a commercial loan. If you ever see a needs list for a commercial purchase, it is outrageous what they ask for. I mean, it is truly, truly like the laundry list is crazy, crazy long. We are still just going to be doing a debt service loan on a commercial property, a residential DSCR loan on a what is legally a commercial property because it's 5 to 10 units. So you don't have to jump through all the hoops that you normally would on a commercial loan, and you're still going to be getting extremely competitive rates that are going to make your cash flow work. So that's
solid.
Yeah.
Yeah. So the reason that excites me is because it gives us access to a product that most people don't know how to use, I'll say. Most of the investors that are out there, they're looking at either for fix and flip specifically, they're looking at single family. Like that's the most common because that's what everyone talks about. That's what the shows are about. That's what Tarek does and all the stuff. So you can fix and flip 4 units or less.
Tarek?
Yeah.
Yeah. I know him. I've got his phone number. I didn't know that he's like a popular guy.
Tarek and Christina? Like Tarek, is it called just
T
El Musa?
A
You're talking about El Musa?
Tarek?
Yeah.
Yeah. Oh, okay, cool.
Yeah. Yeah. He does a lot. He's done less, but
He sends me always like properties that he wants to offload without flipping.
Mm.
So
yeah. Oh, so he'll get it under contract and then he'll be like, it's
Yeah,
here.
the-
I'll just take 30 grand and just walk away from
yeah,
this.
yeah, exactly. I'm like, they're not exactly great deals. You already went through the numbers and they're not,
Yeah. Yeah.
So
No, that's where the money is. And that's the focus of the whole business. The whole business, the money is how low can you get the property?
basic arbitrage.
It's truly arbitrage. You can get caught up in, and that's what we're kind of joking about here is that, Tarek has done hundreds of homes. He's done hundreds of flips. He's had, I think, 3 different shows, including his first wife has spun off and done her own shows out in Tennessee. I can't name them. If my wife was on the phone, she'd tell me all of them. And they do a good job. They do a good job. They're honest people. I've worked with Tarek before on sales, not on investments or anything like that. But show. What was I saying about him? I was saying something. Oh,
Arbitrage.
the funny thing is, yeah, if he gets it low enough, it's like, okay, I could put my entire team, which there's opportunity cost to my team working on this. That's he has his own contractors. I could put them on this, gum them up for 6 months, or maybe they're already at capacity. I could gum them up for 6 months. I can go and spend time trying to hire a new team, which most people don't want to do because once you have people that can do it, throughput's better just to stick with them and take a risk that I might make nothing or end up owing money on this when I flip it and it's all said and done. Or I could just walk away from this and take my profit right now. And so when you control the contracts, you have all the power. It's very powerful. That means original contract. Get that original contract, decide if it still makes sense for you to go in, put a bunch of time in. I did this I did this in November actually with Craig and Coby. We were looking at one and they were like, "Hey, Josh, if you want to do it, you can do it." And I decided, it didn't really make sense for me to do it at the time. Because going into the holidays, it just didn't make sense. So Craig and Coby took it, and it made more sense for them, right? Because whatever you're working on, you have to be careful with your time, right? Because we also still want to have lives outside of all this. So let's go through this one. So I have one. I really wanted you to run my numbers here, and
Sure.
so I don't muck them all up.
Yep.
So I have it's a single family. If I looked at title,
Mhm.
it says it's a single family home. It's in Long Beach,
Uh-huh.
in an area that's not super desirable, but it's next to a throughput road, and it's not like deep in a neighborhood that would be, I wouldn't call it undesirable. It's in an area that's desirable because it's access to a good street. Still not, it's not Bixby Hills or Bixby Knolls or anything like that. And it's not downtown where it's desirable because it's downtown. It is a house on a 3,000 square foot lot. And it said a single family. But the owner and the agent kept saying it is a mixed use commercial. Mixed use commercial because they had a laundromat downstairs for many years, not like that now. It's got 2 garages and it's just a box.
Mhm.
The thing is just a box. And so they're listed at 560,
Mhm.
or actually we'll say contract price is at 560. I actually called the city of Long Beach this morning. They were very helpful. I don't know, Craig, if you had this
They were
experience.
great.
Yeah, they're very
They were
helpful.
great. Yeah.
Within 2 minutes, and this it's worth it just to call sometimes or just drive by, the planning department. But I'll say within 5 minutes, I had a planner on the phone and I gave him the address and he confirmed the current state of the address. It's actually it's already transitioned to a multifamily zone. However, and he was like, oh, however, because
R2 or R3?
uh it's just multifamily. It's just multifamily. It's a news transitional zoning, he said.
1.5?
It didn't give a number.
Okay.
It didn't give a number. And so the way that it works is that that transitional zoning for multifamily is based on lot size and setbacks,
Mhm.
right? So they kind of just blanketed it because the city also has this big old swathe that is also
Swath.
yeah, swath. Has this big old swath that is also like a special planning zone because it's all downtown and they're going to do stuff. Who knows, for the Olympics or whatever? Who knows where the money's going to go at some point? So buying in there, you have to be really careful because converting things could be very difficult and completely kill a deal. In this case, he confirmed that it's multifamily, and then based on the size, he said, "Hey, technically, a architect will have to go to the code and confirm the exact amount of units you can have, but just quick math, you could have no more than 2 units here."
Mhm.
So I'm like, okay, great, because it's
Based
only
off of the lot size.
lot
Did
size.
you go on Zemus and check it out?
Uh, Sieges?
Zemus?
Zemus? No,
I'll show you after.
I did not.
Okay.
That would be great.
Yeah.
If you could show me that. I've used different tools before, like Land ID and stuff like that, but is that a zoning? Is that a zoning?
It'll tell you how many units per like lot size
Oh, that's
and all that.
perfect.
Yeah.
Yeah, so we need to have that.
ZIMAS.
Yeah, we'll do that after too.
Yeah.
Little tools make a big difference because it saves a bunch of time. I could spend an hour calling different contractors trying to get quotes for something, and it's not even a possibility because I can't make it a certain size. So it's currently actually in single family form. The way it's laid out as an external staircase, so I got to figure out like whether I put it inside or what have you, which I'm talking to my contractor about. But he confirmed already it could go to 2 units.
Mhm.
It's 1,800 square feet. If I had 2 units, I just ran with basic numbers conservatively. 800 square foot, 2 bedrooms each, totally a possibility. Totally a possibility. So if it's at 560,
Mhm.
560, right now I'm just running with 100K just to keep it general. I don't know if I can get under 100K because right now I don't have to change any wall. Actually, I have one wall for 1 bedroom needs added, which is super simple.
You can also do soft costs in your construction loan too.
Perfect.
So
So we have 100K construction,
ARV.
560. So that's the problem is ARV is I haven't, because I just found out that it's going to be multifamily for sure. And I could do ADU, I could do JADU, or I could do an official second unit. I have not ran comps on the duplex. However, knowing Long Beach, bad duplexes, like bad small ones, are usually in the 650 to 750 range. I would say if this is all done up nicely. Now the problem is I got to figure out the parking. I probably want to give one parking spot each. That's another thing. The planner told me that that zoning specifically does not have a garage requirement per
Mhm.
unit,
Mhm.
which some cities do. Like in Los Alamitos, where my office is, that's changed. That's changed a lot actually for how many bedrooms you're allowed to say a house is. Because if they took away one of a single garage, or took away the parking spots because it has to have garages plus certain amount of parking spots,
Mhm.
the deal could be completely a non-starter, right? Unless you add on a bunch of square footage. Anyways, I had a
It's
client.
like an old rule from the 50s, I think it was.
Yeah, it's an older rule. Actually, the guy who got nabbed on that because I was going to list his property a year and a half ago, and he's been working on it for a year and a half, adding essentially a tandem garage spot
Yeah.
and doing it himself because he doesn't want to pay someone. Yeah, it changes everything, but it's very valuable to have that knowledge. But Long Beach did away with that for most of the city.
Yeah.
So, which whether you have an opinion about that being a positive thing or not, it's definitely a conversation for the value in the future. In this case, it's a wash. It's not going to hurt my value to not have garage spaces.
Yeah.
It might help me a little bit to have garage spaces, but the reality is having more internal space, more livable space, way outweighs the cost of like, oh, you're gonna have to park on the street like 70% of the other houses around here.
Yeah.
So in this case, I'm probably going to go into the garage. What do we need next? Oh, we're looking at ARV.
ARV.
So if it's a two bed in great condition,
Mhm.
it's probably going to be about 850. I don't know if I can get as high as 900 or a million.
Mhm.
850 is probably conservative. I might be able to get that up. So this one's I do think this one's going to be too thin, but this is why I wanted to run this.
Yeah. So this is
2 points.
we can change that.
Is this being shared?
It is not being shared,
Okay.
but we can. Should we?
Whatever. Yeah, I mean, this is again, if they have questions, they can call and go through.
Yeah. Let me share the screen so that they can see what we're.
You know, it'd be powerful, Craig, if we took just the meat and potatoes, not all the details, but just the meat and potatoes of this calculation.
Yeah,
And we had a page, like an internal page for the team.
we're working on it right now.
We can do
Oh,
that.
perfect.
Yeah, it's a really good idea.
So this is the Excel sheet that I use to I run on all the fix and flips. It also has for DSCR down here, but this is what we're focusing on. So
Okay, next week, when you join us for our AI competition, I'll show you all about the little
All right.
chatbots.
So this is our purchase price, 560, our rehab budget of 100,000, ARV. So again, after repaired value of 850. These are going to be the key indicators down here on what you are going to have as a max LTV. Again, we can go up to 90, but because our ARV is at 850 and we're in it for 660, we have to do a 12% down in order to keep our loan to ARV under 70%. Loan to cost is a lot more flexible. I'm really not concerned about this unless it's like above 90%. So we're right there. So this is going to show closing costs, down payment at 12%, origination points, initial reserves, legal fee, underwriting fee. Here's going to tell you how much you're going to make on this project. Again, this is based off of the 12-month time to flip. You can adjust that to see, get those numbers up. So it's a 60% ROI on cash. So $86,000, I mean, that's not bad if you're going to flip. I mean, we could change these numbers.
The reason it's not bad for me, so first off, my in is 67.2 plus, is it all six? No, it's
Look,
83.
and look at the numbers that they change as the time goes down. So this is where you change
yeah.
time to flip. So it was at 10.
This is going to be pretty quick if I don't go with a full extra unit and I just go with a JADU, which is 500 square feet within the structure. The JADU will still rent well. This is done in, I'd be surprised if it took longer than 3 months. So I put, let's say 4 months.
We can go back here
versus
to 4. So now your profit jumps up to 117. I mean, it's 100% if you're able to do it in that 4 months.
Yeah, that's actually the only thing here is that my guy will probably want 125K to get it done. But other than that, my total in is 83. So my cash I need to bring to the closing table is 83 grand.
Yep, 83 grand.
Yeah, so this, I actually didn't think this deal was going to make as much sense. The reason it makes more sense to make around 100K, some people that's life-changing money. The reality is like there's a lot of risk here. And I have to put my guy to work on it. And who knows, once he gets in there and starts actually taking things apart, what's going to come up. That's why you like to see at least 100K in profit. You don't really want to take things that are less because you start eating into it. You could essentially work for 10 grand for 6 months, right? 10 grand, 20 grand, whatever that is.
If it's a positive number, it's a positive number. I lost before. As long as it's positive, we're good.
Take that from the grizzled veteran.
Yeah.
If it's positive, it's positive. So that being said, this one actually makes a lot more sense. Can you help me right now figure out if it makes more sense for me to hold on to it and rent it?
Yeah, I mean,
because I can rent it easily. Either setup, it's going to rent at least for 5,000 a month.
So we can go down here to the DSCR calculator.
Because we got to figure out what the loan that's getting refied now.
Yeah, which is going to be the combination of your
60
yeah.
plus interest.
No, well, the 560 at 88%, so your total loan amount is going to be over.
Construction too, though, because that got tacked on.
Yeah.
Assume I had to use the whole budget, right?
Yeah, so it's 592, 800.
Okay, got it.
Okay, interest rate on something like this is probably going to be, we can say 7% just to be
Maybe you run at 7.5, like who knows, right?
conservative. Yeah, I mean, we could run at
I think
7.
your DSCR is like what, 6.75 right now? Something like that.
I priced one out the
For
other
an
day. It
800
was
credit score.
low 600s. No, it's high 7s,
Okay.
740 to 760. Okay, place monthly rent is how much did you say? 5,000?
Yeah, conservatively, them together, I can get 5,000. Now that's gross. That's not my net.
Yeah.
My net's probably closer to 45.
Taxes on a 560 purchase are probably going to be about 5,600 a year, or let's call it 6,000 a year.
There's a month gone.
Annual insurance on a duplex. I mean, it's not hi-fi or anything. You want to call it what, 15?
It's probably 25.
Okay.
It's not hi-fi or anything like that.
Yeah. No HOA.
No. TIA?
TIA, I'm not sure what that is. I think that's just like maintenance and stuff.
Okay. Oh, yeah.
I mean, what do you want to put it at?
Yeah. Is that what that is what it is?
Yeah.
I think that stands for I like to do 8% of total. So let's say 8% of 60. So 5,600, something like that.
So that would put, oh no, this we want lower. Sorry, 1 second, because we have this at 85. Let me do my math on that.
So just
it'll debt service.
we are
for sure.
screen sharing, right? So
Yeah, we
people
are.
at least following along there.
Yeah.
So what we're doing, just to recap, we just ran through a scenario of one that I figured out is a possible fix and flip, and I could either sell it and make somewhere between, depending on how much I'm into it, somewhere between 80 to 120K resell. Now I don't have this property under contract, excuse me, but I'm basically they're ready to. It's ready to go. The agent's basically waiting for me to write an offer, which we can talk about the offer and how I'd structure that. Either I resell it in, let's say, 4 to 6 months, which is going to put me into the fall. Not the best time to go back on market, but still it's probably going to get a lot of attention because most of the Long Beach duplexes or rental properties are in bad condition. So I'm going to stand out. I either resell it or figure out a way to rent it. Does it go as a
It debt service is at 1.08. So you are collecting $60,000 a month in rent.
a year?
Sorry, a year in rent, and you are paying 49,923 between taxes, insurance, maintenance, and your mortgage payments. So a year you're making
10.
$10,000.
So I could do this deal, so this is the way you have to look at it. And this is, again, you as agents, you don't have to be the investors, but that's kind of what we want to do. If we can become, as agents for like Link, if we can understand how investors are thinking, then not only can we take shots at maybe getting these investment properties, but we can sell them better. If we understand them, we can sell them far better. Because when you're talking with an investor, if they're been around and lost a ton of money, like some of the people in this room, then made a ton, lost a ton, it nets out to some form of positive, hopefully positive. If they've been around, they don't have time to hear, oh yeah, this is a beautiful duplex. They don't have time to hear about that. They want to know, is it going to make money? And what's the in, what's the out? How is this happening? And so if you can understand it quickly, know exactly who to call, right? Then it's powerful. Back to this, do I want to spend 80K cash, 90K cash to acquire an asset, make it a nice asset, and then make 10K on my 80K down plus time, right? I put in a bunch of labor time into this. 10K a year, maybe, assuming that I have full occupancy, assuming I get the rents I want.
Plus you have your depreciation, tax benefit.
Well, that's actually
Schedule E is the most powerful tool in taxes with the property.
And being in real estate, you can do that.
PE, right?
I mean, yeah, depreciation, well, depletion never, but taxes, insurance, mortgage
Appropriation.
interest,
Yeah.
all of that, you can show basically a loss for on a property like this. Shit,
27.5 years, right?
27.5 years. That's just in the depreciation. You've also got, again, the insurance, you've got maintenance of the property, you've got
All write-offs
all write-offs.
against your big income.
You can probably lose $25,000 on your, or have it, negative $25,000 for this one property on your taxes, which for a self-employed individual is humongous. The other thing, I'm looking at this property from maybe a slightly different standpoint. Yeah, you're only making $10,000 a month on it.
A year.
Sorry, a year. I keep saying month. A year, but you now have another asset that you can leverage in order to buy more properties in the future.
If it
And
appreciates.
if it appreciates, which
It probably will.
it probably will. I mean, again, this is Long Beach, which is one of the last affordable beach cities in Southern California. I mean, not everywhere, obviously, it depends.
And the Olympics, the reason I'm also looking at Long Beach is the Olympics is going to bring money and attention.
Yeah.
And the city will expend resources to make the city more, I'll just say cleaned up. Like they will do that because there's going to be so many events. So I'm looking at it from that standpoint is a run up on appreciation, assuming that rates come down.
Yeah.
And yeah, maybe I don't sell it later, but
And that money that you invested in that time, it's still in that equity.
it's still there.
You've got an $850,000 asset that you've got, $595,000 lien against. I mean, you can tap into that. If you need to sell it, you can sell it.
Yeah.
But I will say I look at financials day in and day out. I mean, that's all I do is I look at tax returns and balance sheets and pay stubs and W-2. I mean, you name it. I look at everything. Investment portfolios. My most wealthy borrowers, people that I work with, all have impressive real estate holdings, and that's where they've made the majority of their money.
Yeah, it's true.
Or you hold this as a Airbnb for the Olympics.
I mean, you could do short-term rental with it too. I mean, you
and
can
they have loan for that as well. If you want to do.
Yeah, so that falls under the same DSCR. So let's say that you've got one that's kind of tight, or you do want to use it for a short-term rental. There's certain markets, like I've had borrowers that do short-term rentals in Ojai, California. It is 300 to 500% what you can make on a long-term rental versus what you can make on a short-term rental. Again, use tools like AirDNA, airdna.com. If you want to check it out, you can put in an address. It'll tell you, compared to the other properties in that area, what the occupancy rate's like, how much you can rent it for, how much you can make. It's an awesome tool. We use the same one for qualifying for loans. Yeah, I mean, there's a couple plays that you can make here. I think that doing the fix and flip to sell is a great way to capture a lot of capital, but I think that everybody should be moving towards purchasing to hold, even if you're not making, crazy money. If the property can pay for itself and it's in an area that's going to appreciate, then I think that's the strategy that I preach.
So it sounds like Eddie and Craig both want this property, so I might sell it to them.
Yeah.
But I actually someone that I've worked with a lot, been in real estate 35 years, 15 properties, all single family, about 300 or just under 300 of write-offs just from that depreciation, just from that portfolio a year. So that means the first $300,000 they make every year is just non-taxed, essentially.
Yeah.
Not the same as non-taxed, but
Close enough.
it's very powerful. It is definitely the wealth key. So I was not thinking of re-renting this. So now that is an option. While we're talking, do we have time or is this too long? We're at 11.
Whatever.
While we were talking, the guy that I mentioned when I came in here on this bigger one, I have a bigger one that's off market in Bellflower. Now some of you may be thinking, gosh, where do these deals come from? It's come from years of getting your fingers into relationships everywhere you can get them, and saying, hey, I'd like to, I either have clients that'd be interested, send me things that come up, or just knowing the right people. But this guy he just texted me and said, looks like we're going to be able to get this done for you at 780. I just heard back from the seller. Do you want to go by and swing by again today? So this one is a 3,000 square foot house where the seller had tore out the entire kitchen, the staircase, the upstairs bathroom, the downstairs bathroom, the downstairs living room. They apparently they didn't have a leak. It looked like it was a leak, but apparently the story is that the seller wanted to completely remodel and move the kitchen, had family come in, make it multi-generational, and they tore everything up and then couldn't make their mortgage payments, and now they're up a creek. So my contractor is scared of it. I'll say scared. He probably would be very offended if I said scared, because it's a ton of work. He's saying he talked to a couple guys. They're all saying it's 300 to 400 grand of reno. I don't think it's that much. Actually, off the top of your head,
I love when realtors say that, and their contractor says it's going to be 300 or 400 grand. You're like, no, it'll be way cheaper than that.
yeah, that's the
my
key. Just tell
When
them
the professional's saying this, you're like, nah. Here's you go.
just tell them they're wrong, and then it'll all work out. Well, there's guys saying 300 to 400. But the reality is, like, building this house is probably 500 grand, right? So it's like, there's something missing there. 780. Let's just run quick numbers on it.
Sure.
Let's say I get it at 780. So the other thing I like about this other little deal, that was 1,800 square foot total for the top and the bottom, this little box I was talking about in Long Beach, is that it's bite size for the timeline, which we're going to see how this is going to affect it, because we're going to have a problem with this other one. It's bite size for the timeline, but also for, like, if I can be in and out of this in 3 months, I can still be selling property. I can still have a life, and I can realize my return, or at least the option of return or refi, much sooner. You don't want to get stuck in things. It affects you a lot mentally, at least me, and it's just because I know myself. So construction, let's say it is 300 grand, which I haven't ran it with this, so this is perfect. ARV is minimum 1.2, but I think we should put 1.25 because I feel pretty confident it's going to go over. It is a 9,000 square foot lot, the second biggest lot in an entire block. Nothing has sold as big as this in this neighborhood, but the comps nearby in the neighborhoods next door that are over 2,600 square feet, none of them are as high as the 3,080 that this one is. They're all selling. They're under contract essentially for 1.2 to 1.25. So I think 1.25 is actually very safe.
Okay.
So
what's your time to flip?
I think we have to give at least, I think, 6 months.
8 months.
Give it 8 months.
Okay. I'm telling you, with this ARV, it is tight. I had to lower our LTV, so increase our down payment to 26%, just to get our loan to ARV down close to 70.
And this is cost me 225 in.
225 in,
Yeah.
And you're gonna make 35 grand.
Yeah. So if it's 300, this is the risk. Someone may see this and then they see that the resale value is 125, or maybe
Yeah.
it is 1.3. It's like, wow, that's a $500,000 difference. Or sorry, yeah, a $500,000 difference.
Yeah, it's $1,080,000 that you're like, oh yeah, it's $1,080,000. I'm gonna make $1 million,
200 grand.
Yeah, I'm gonna make $200,000. No.
Yeah. So how much in holding cost? Because I'm not going to use the 300 in construction all up front, but let's say evenly, let's say 150 in the first 2 months. Say 150 in the first 2 months. What's the holding cost for this? Is it, you have like an average for it?
Yeah, so it's just showing here that the total interest that you've paid on that loan is
52,000.
52,000.
Assuming probably an even raws.
Yeah.
So 50 grand just in the cost of the money after the fact, not the cost of the money to get the loan, the cost of the loan holding cost.
Yeah, if you wanted to go and make it 6 months, you could, but be conservative with something that big. Take some time.
Yeah.
So that's the problem, is it's a big deal. And so I had to educate. The reason, I mean, he literally told me yesterday, this is the guy with the contract, and this guy here, and this is more telling. They're selling their contract.
Yeah.
So they got in to this with a timeline to close with the seller. and they wrote in that it was assignable, and the seller said, I don't care, I just want my money. And then they started putting it out to their email list and people like me, and they're like, ooh, look at this deal. You should come buy this. Look at this. It's going to sell for $1,300,000, $1,400,000, maybe.
Yeah.
And look, we only have it at, it was 850. So I got them down essentially 90 grand, actually. They were trying to sell for 850. They were in contract at 8. Now I'm giving away their numbers, but no one knows who this is, so it's fine. They were in contract at 8. So they were trying to make 50 grand fast and just walk away from it. So would you rather go through all the stuff that I'd go through to get this and then maybe make 30K, or just walk away from it for 50 grand?
Yeah.
So they'd be winning out big time.
Big time.
That's why they're not closing on it. They're not closing because they don't see the numbers.
Yeah.
So I'm, like Craig said, ultimately I'm not going to make a gut decision and say, ooh, I can make this work because I can get
Here, share this analogy.
the rent
I'd
down.
rather miss a good deal than buy a bad one.
Yeah.
Right. Rather miss a good deal than buy a bad one.
Yeah.
A lot of people have that flipped in their head. It's like, oh, we missed out. We could have made 300 grand on that or 200 grand. That should be so far from the way you think, because it's damaging. It's dangerous. That's what Warren Buffett said. He said famously, it's about, what does he say? He said, it's about the opportunities you don't take. It's not about the opportunities you take. It's about the opportunities you don't take. Makes all the difference.
Yeah.
Especially when you've lived it.
Yeah. Right.
But yeah, you guys want to close it up, wrap it up? That's
Yeah.
cool.
Yeah.
You know what I mean? And then
Sure.
just say next week's AI. Talk to our calculators, AI bots.
Next week is AI, guys. Craig is very excited about this.
The power of AI is you don't need Eddie anymore to talk about loans. You can just ask the AI.
Once I'm able, I've built my little bot
Your
that does
GPT.
my GPT that does a lot of the questions for, like I input all the guidelines and stuff like that, and I can just kick it questions. But fortunately, this is still a relationship business. So
Cool.
Yeah,
Any,
that's
any
right. It
questions?
is.
If not, close it
no,
down.
we're good. All right, guys.
A really
Thank you
quick
all for
question,
doing-
you guys.
Yes.
Sorry, thank you so much. It's great to see everybody. My really quick question is regarding any of the fix and flip loans. Is there a maximum amount? Is there a maximum loan amount on those to get the best rates? Just curious.
We can go up to like 5 million.
Okay, great, thank you. And then
Yeah.
one more real quick question is, do you require a contractor, and can you do owner builder, or do you have to have a contractor, and what experience is required if you could do owner builder?
We can do owner builder. They have to have at least one like property. So if they're doing a, $2 million project with a $500,000 budget, and the last one they did was, half of that, then we would probably require a contractor. They don't have to guarantee it, but they do have to work with a contractor. Conversely, if they have no experience, but we want to get them into like a top tier, and they are working with a contractor, if the contractor submits a resume with a list of projects that they've done in the past, we can use the contractor's experience in lieu of the investor's experience. So it can work. It can go both ways.
Cool, thank you so much.
Yep.
Thank you for your time.
Yeah, of course.
Any other questions? Anyone?
Love it.
All right.
See y'all next week.